that we've got those systems in place that make that as easy as possible and as efficient as possible. So statement of financial position, and I'm going to go through these really quickly, tells us how strong our organization is, what are our assets, what are our liabilities, what are our net assets. Some people call them fund balance. You know, different people have different terms for this, and restricted, unrestricted, all that good stuff. So it's a snapshot in time of what our strength is, okay? So here's an example. You have this in your package. This is a little organization. I made it up. So We Care organization, and we can look at their financials, their balance sheet, and say, you know, they look pretty good here. They've got $977,000 in net assets. 787 is temporarily restricted. Well, that's kind of interesting. 53 is permanently restricted. That's not so bad. I got 137,000 in, whoops, I'm so sorry. That wasn't my intention. I got 137,000 in unrestricted net assets. Is that good or bad? I don't know, because I need more information, but it's at least it's positive. Yeah. And then we look up here in assets, and we're like, well, they've only got 56 grand in cash. Maybe that's kind of interesting. And what is this $787,000 in long-term pledges receivable? Okay. This is obviously an organization that has donors that make multi-year pledges, right? So we already know something about this organization, even though we don't have any idea who they are. Somebody who's, people like making long-term commitments to them. And the other thing about generally accepted accounting principles is somebody makes us a multi-year pledge, guess what? We're supposed to book it, okay? So if I come up to you and I say, Peggy, I'm going to give you $10,000 a year over the next 3 years, and here's my pledge, guess what Peggy has to do as the ED of San Diego Social Venture Partners? She books $30,000 that year in her revenue. How much does she get to book next year? Nothing. So this is part of, you know, planning with your development plan and everything else, but it's but it's important to understand that. And a lot of organizations don't do this, and they really are supposed to be. But look at the difference it makes in analyzing who you are and what you are. Then we move to the statement of activities, which is just like it sounds like. Here's what we did. Here's the money we came in, the money we spent, and what was left. Okay. So we have the revenue side. Ray talked about this, so we're not going to beat it to death. Contributions can be cash or in-kind or donated professional services, which we touched on already. They can be restricted or temporarily restricted, or they can be unrestricted. So you have different ways, two different sorts already on just one very simple thing. It's actually much more complicated than accounting in a regular business. Okay? You're nodding, yes. I know. It's much more complicated than the accounting of a regular business, because these revenues have lots of different things associated with them. We can have grants, we can have contracts. These might require special accounting. We have exchange revenues, which is really a fancy accounting term for a sale. We have special events, galas, unrelated business income, which you guys probably don't see very much. We have dues and memberships. We have ticket sales over there. There's a lot of different ways we could. So we got to account separately, and every single one of these has different accounting rules. It gets complicated. Here's a statement of activities for the WeCare community organization. This is probably pretty common to what you guys might see in your year-end audit or a year-end one, where we've actually sort of grouped up program services management and general and fundraising, and we've sorted it by the source of the money: unrestricted, temporarily restricted, permanently restricted totals. Okay, so this is like a year-end kind of a statement, and you can see that in total, I'm just going to focus on the total line for a minute. They have $902,000 worth of revenues, and they have $705,000 worth of expenses. So, you know, the increase in net assets, which is basically what you're looking at in a not-for-profit, is 197. And it's broken out between, you know, 592 of that, net 195 was temporarily restricted, and the rest was unrestricted. Okay, so you know, you can kind of see that they've got in-kind services of 113,000, and this is the point of this one. The in-kind services here are professional services. Okay, somebody comes to your beach cleanup, you don't get to count that. These are people that you would otherwise have to pay: accountants, attorneys, nurses if you're doing volunteer health care, architects, professionals of, you know, consultants, depending on what kind of organization you're in, what the professionals are doing for your organization. Like I say, it could be program, could be admin, kind of doesn't matter. In this particular organization, these are program people, okay? People who are donating in-kind services in support of a program, okay? Like I said, it could be nurses, could be doctors. I mean, it could be anything. Yeah?
Would you include rent and other?
Rent and those kind of things are not in-kind services. They're in-kind rent and in-kind like goods. People donate things for your gala. Those are in-kinds as well. Furniture, all those would go on your statement of activities. Anytime anybody gives you anything, okay, you're supposed to value it and put it up here. Yeah, over there.
If someone donates a computer to a school, we can give them a charitable
Yes.
receipt.
Yes.
If they're donating their time to an accountant, do they get a tax benefit for that?
They get no tax benefit. No, and that's why the IRS doesn't care about it and doesn't want you to report it, because they're not tracking it. Back there.
If one of the officers is an attorney and doing all the paperwork,
If it's a board member, no.
okay, or if there are officers like vice president or whatever.
You know what, let's ask me afterwards. I'd need to know a little bit more about your specific situation. I don't want to give you a blanket answer that might be wrong. Okay, I need to move on and then I'll keep going here. So this is a GAAP financial statement, and I did this one just very specifically to explain to you the difference. So you can see here that we've got the 113, and I'm just going to tell you the 113 is down here in program services, because the entry is to record the income and then to record the expense as though you paid them for it. So it's as though somebody gave you a check and then you hired somebody, right? But here I'm going to look at it another way, and you don't have this one, I added this. This is what it looks for the 990. The in-kind services is nothing, okay? And your program services spending went down by the same number. So that's the difference in how it's recorded in the two things. And we're going to come back to this when we get to ratios. I'm just pointing it out so you know where the numbers come from. Okay, functional expenses, program management, general, and fundraising. This is what gets us into trouble with our nonprofit starvation cycle, right? Okay. Required by GAAP for social service entities. Other entities don't have to do it, but everybody has to do it for the 990. So you need to make sure that your accounting system really can track this stuff, okay? One of the resources that I've given you on the back of your presentation is a bunch of websites, and there's a white paper on accounting systems for not-for-profits that I would encourage you to read. Okay?
Can I ask you a quick question?
Yeah.
Does marketing fall under fundraising or program?
Marketing is almost always fundraising. Very difficult to justify allocating marketing dollars to program, unless you're marketing for people to come and sign up for food stamps, okay? So if it's general awareness kind of marketing that you're hoping is going to bring you funding, no, it's funding. But if it's outreach marketing, then it would be program. So you see the difference? Okay. All right. So here's what a statement of functional expenses looks like. And again, you've got this in your package, and you see here's these totals, the 444, the 109, the 152, and then I put those totals on the statement of activities rather than have, you can't fit it all on one of these PowerPoints. So you got the detail here. So here's what they've got. Here's what they spent for the year, and here's the breakdown. And here is in professional fees program. Out of that 124, that 113 was the donated professional services. Remember that from our first page, okay? So moving through quickly. We've got a statement of cash flow. I already told you how I kept my job. So the whole idea of a statement of cash flows is to explain, well, gosh, if I have $787,000 in pledges, how come I only have $56,000 in cash? Okay? And so the statement of cash flow basically reconciles this all so that somebody can actually see what went through the cash account. It's really important. If you're not doing this every month, call me and I'll teach you how. Okay? Because you need to be doing this every month, and your board members need to be looking at this, because this is going to tell you that even though this organization made $197,000, including those pledges that came in last year, their cash went down by $20,000, and this explains why. Okay? So the purpose of the statement of cash flow is so that you can really manage your liquidity and understand how the cash is flowing through the organization. It's really, really important that everybody who's running this organization understands that. Because at the end of the day, you can have as many pleasures as you want, right? If there's no money in the bank, you're not making payroll, okay? So, you know, you need